All right. Welcome to We'll Name This Later with Zach Tarbett from Edge Home Financing and myself, Jerome Hansen, Hansen Realty. Today, we are going to dive into a little bit more the lender side of everything. So, I'm basically going to be asking Zach a couple questions so that he can clarify them for me. He actually brought up a term that I didn't even hear about before, I had not heard of yet, and I'm actually just going to dive right into it. So, the term that he brought up to me was recasting. Zach, what is recasting?
So recasting is an option. And first and foremost, this is only an option for your conventional loans. You cannot recast a government loan, so a USDA loan, FHA loan, or a VA.
Okay.
So keeping in mind that this is only for our conventional homeowners. What it is let's say that you have a loan amount for $400,000, for example, and you have maybe 50 or 100,000. We'll just use 100,000 for rough numbers.
Okay.
Now you want to apply that towards your principal because maybe your goal is to pay off this home as fast as you can. So you apply your $100,000 towards that principal reduction. But now what you can also do is contact your service provider. So this is done through whoever you're making your mortgage payment to, and tell them that you want to recast. So essentially what they're going to do is they're going to pull your loan. They're going to see that you've made a huge chunk towards your principal, and they're going to adjust your monthly payment to match that new principal balance.
Okay. So just to be clear, right? This would be in order to get your monthly payment lower, is what you're saying.
Yes.
Okay. So why would that be good for the lender? They've got you locked into this contract,
Mm-hmm.
right? You're paying monthly. Um, you clearly qualified for it already. You probably have the same income, right? Why on earth would they feel like it's in their best interest as well to recast you and have you paid less? I'm assuming your percentage drops too, right? Your percentage rate.
It depends where the market's at. As far as I'm understanding, your rate wouldn't drop; it'd stay the same. But
Okay,
you're making payments towards a lower principal balance, which is helping somebody save
right.
money out of pocket.
Huh. Well, that is interesting. And as long as it's so just conventional loans, right? So as long as it's a conventional loan, you can always do this as long as you've
Yes.
got enough money.
Yes. Your loan terms would stay the same and your interest rate would stay the same, excuse me. So your interest rate's not, so there's really no changes to your original terms, right? But what you're doing is instead of making a monthly payment at that $400,000 mortgage that you have left, now your monthly payment goes down to that 300,000, for example. And for some people, depending what your interest rate is, your terms are, that could be several $100s a month in savings.
Yeah.
And then if you really want to get savvy with this technique, now that your monthly payment is lower, if you want to maintain the same budget, you could keep making an additional principal payment that's over to help even pay off your house faster. So this
Yeah.
is a strategy really for that person that knows that they want to be in this house for an extended period of time,
Yeah.
not our traditional 5 to 7 years that we do see. So this is somebody who's thinking a very long-term plan with that house, reducing their monthly expenses to pay it off. And it's a great strategy because, like I said, you're going from your $400,000 monthly payment down to 300. But if you have, let's just say, an additional $500 of new capital that you could apply, you could put that directly towards your principal, not even touching your interest, and pay off the house even faster.
Yeah. And let me ask you this. Is it an obligation of the lender to recast once you've done that? Or is it basically lender by lender? It's just their choice.
Not every lender will offer it, but also if you are a homeowner watching this, you have to request this. So your company is not going to reach out and say, hey, would you like to do this? This is
Yeah,
something
I
that
mean, I've got it in my head, like I can't see why they would want to do it, but
it is a great tactic for that conventional homeowner, right? Really, the
yeah.
way that I view it, that investor, they're they want you to stay with them because if they don't offer a recast, what you can simply do is if it's eligible, refinance with a different company and apply that
Oh,
principal
yeah.
as part of your
Okay.
cash to close. So now, not only, let's say, and your current service provider, they're losing you as a client altogether and they're losing business over here. So this is why I see it as
Yeah.
they're not going to say no unless they have some crazy kind of rules where they just can't do it. But then that is where you, as the buyer or homeowner, excuse me, if you're savvy, you could take your business elsewhere and put
So
that money because
now,
someone,
okay. Now it finally came together in my head. As soon as you said that, now it makes sense. And I understand why the borrower would be doing it, obviously. And then I understand why the lender might be actually acquiescing to that request. That's actually, it makes perfect sense now because if they don't, then you're absolutely right. Why wouldn't I just take my business elsewhere and just go refinance, with somebody else since I've just paid off, an extra 50 grand towards the principal. I refinance it somewhere else and, it's a completely different loan with different terms
mhm,
altogether. So yeah, that makes perfect sense now.
yeah. And then why, like a homeowner wouldn't want to refinance is because now they may have, maybe they've been paying off their mortgage for 5 years. Well, now if they switch investors, they have a 30-year mortgage again. But if they
Yeah.
recast,
Yeah.
there's no change to their loan terms, no change to their interest rate, but they could have a lower monthly payment, but chipping a huge chunk out of that principal out that they have remaining on the loan balance.
Okay. Yeah. And, on that topic of refinancing, if they did decide to refinance, whether it's with the same company or not, could you change the number of years? You said at first that it could be, another 30-year term, but could you refinance it into a 15-year or something like that? If, your goal is to ultimately just pay this home off because you want to be a 20-year same homeowner. You know what I mean?
Yeah. And you could absolutely do that. You can go from a 30-year mortgage to a 15-year mortgage, or conventional honestly has 10, 15, 20, and 25-year terms. So
Okay.
you could take it down to any one of those terms if you'd like. But when you're going with a lower mortgage terms, you're going to have a higher monthly payment. And the only
Yeah.
catch with that is you still have to qualify for that monthly mortgage payment if you were to do that. So if you're putting a big chunk towards your principal and going to a lower term, you're probably not going to have an issue. It's probably going to be just a
Yeah.
nice balance. But if you're just trying to
Okay.
go from a regular refinance, so what we have a few different kinds of refinance first. So we have a rate reduction or rate and term as we call it, and then we have a cash out option. So rate and term is simply just lowering your interest rate and adjusting your terms. With the cash out, you're pulling equity out of that home directly.
Okay. Got it. And what are you seeing right now? I mean, with the rate environment that we're in, are you seeing anybody coming through for refinances or, but not personally your numbers, but what's the trend? What are you seeing?
Yeah, I've seen I've seen a lot of people reaching out lately for cash out refinances. People are trying to find
Okay.
ways to tap into their equity, whether they want to for financial reasons or for upgrade reasons. That's been a big one. The rate and term refinances are a little bit more difficult just because rates have been all over the place. I have seen it where if somebody did close in October and let's say they're in the mid sevens, they can get down to, interest rate in either the high fives or the sixes potentially based on their buyer's profile, their credit score, and everything like that. So it's a little bit all over the place, but I think we are slowly getting towards a heavy interest rate or excuse me refinance market if rates continue to downtrend. As of today, with the job reports, they're a little bit worse today. So we'll see how things go moving into the summer season. The Feds did announce this week they're still hoping for rate cuts this year, but we'll see how that goes with everything. So they're here, but it just depends. For the rate term, it's a little bit harder for a cash out refinance. If you have the equity and you qualify, it's very easy to pull equity out of your home that way.
Yeah, I mean, what you just said there is definitely spot on as far as, some of the things I'm seeing in the market. It's like it is a very confusing market because strangely enough, yeah, the jobs report did come out today, but the unemployment is lower, right? So it's kind of strange that we're staying below 4% unemployment, which means that it's not looking good for the Fed to reduce rates, right? There's no reason for them to reduce rates if so many people are employed. So we're still going to be feeling the harshness of these higher rates because of the fact that we think that everybody is employed. However, you're seeing people reach for ways to get cash by selling stuff. They're selling cars, they're going over on their credit card debt. You know what I mean? People are definitely reaching out to me to try to look for selling homes now, right? I think we're reaching a point where people are cash strapped, even though the majority of them are employed, which is it's a very weird thing to be going through. So that it confuses what's happening in the housing market as well.
Yeah. And the big thing that's been impacting, your modern American, middle class, right? Student loans came back into play. So now people are
Hmm.
making payments on their student loans, which could be very minimal or it could be huge. I've seen student loan monthly
Yeah,
payments be as much as $1,500, which is for some people that's
yeah,
their
that's a
rent
lot.
or mortgage or it's a huge chunk of your monthly expenses. And then we look at credit card debt. Credit card debt is at an all-time high. People
Yeah,
have literally maxed out their credit cards because they're trying to live on them. So it's a very interesting. And the other thing too, going back to the employment rate or unemployment rate, we actually want that to be at like 7% to 8% is what the economists say for things to kind of get better,
yeah.
which
Well, that
is
ain't gonna work.
counterintuitive to what we
Yeah,
think as if everybody has a job, it's okay. But they actually want to see a little bit higher of employment. So when we see a positive job report, me as just a regular person thinks that's great. People are working. Uncle Sam is saying, shit, we need less people to work.
yeah. It's so crazy. It's such a weird way that our economy works, but it is what it is. Now, I mean, unless you've got something else to add to, the recasting or the refinance, I mean, I think that's pretty much the questions that came to mind that helped
Mm-hmm.
me understand it anyway. I'm sure people will reach out to you if they have questions about recasting or refinancing in general. Is there anything that you can add to those two topics right now?
No, no. I mean, I'll just say with recasting, it's great if you can do it, but it is a long term play. It's not something that I
Yeah.
would dump money into a house right away. If you can invest that in other vehicles, but if that is your forever home and you're comfortable with it, it is a great tool. But keep in mind, it is only eligible for conventional homeowners. So if you have an FHA loan, a VA loan, or a USDA loan, this program's not eligible for you, unfortunately. So keep that in mind. And then refinancing, if you're a homeowner, you're probably getting so much damn mail about refinancing right now. I would say that not every time is a good time to refinance. And before you try to save $50 a month on your mortgage, speak to somebody who actually has your best interest in mind because those fees associated with refinance may not be beneficial to you yet until rates get a little bit lower.
Awesome. Awesome. All right. Thanks for the recap. And I think that's going to do it for this episode of We'll Name This Later. We'll catch it next 2 weeks. We'll do another one.
Yes, sir.